Hello everyone, K Kim here from the Traders Club to tradersclub.com. Thank you very much for tuning in for another episode of Market Commentary. I'm going to make this very quickly, but thank you very much for following my blog, following me on Twitter and StockTwitch. And so I want to look at S&P 500 here. We're looking at 65-minute chart right here, okay? So we got 65-minute chart, intraday chart here. First of all, we kind of, yesterday we talked about here, at the club, we talked about there's potentially bearish divergence happening there with the yesterday's, market sell after the shooting, news came out in California. And so we had that yesterday. We had this bearish divergence. Bearish divergence basically saying is we're starting to get a little bit extended there in the minor term. You can see that how, price action, put in higher high there. You can see that higher high, but MACD putting in lower high. What he's saying is it's getting extended. The buyers are getting tired. So then last time, this was back in November 3rd, we saw that, pretty good size of a minor term pullback. And then we saw something similar yesterday. This was just yesterday right about here. And then we continued on with that sell up today. Once we lost that neckline right around 208.65 today, and then it continued on to the lower side, and then there was the next support level was right about here at 207.53, right? You can see that we stayed here, hung around here for like an hour. We threw that doji, we lost that level once again, and then this thing started tanking throughout towards the end of the day. But where it came down to was this level right here, where there's a gap area is involved, right? Many times when there's a gap right here, that gap fill can act as a support there. So that's exactly where it came down to, the last level of gap area. Or this was actually last time when we had that swing higher low here, and this was the support level. That's where it came down to there. So looking at this, bearish divergence on 65-minute chart gave us a little bit of warning sign there yesterday with the yesterday's signal. And once we start losing these support levels early this morning in the midday, and it came down to the last level of support where we threw what? We threw that bullish hammer candle there. However, in any of these bullish hammer candles, we're just going to go back to this chart right here because I want to look at again, we're still looking at 65-minute chart candles here, okay? Each candles represents 65 minutes on the spider. So you can see that we have this bullish hammer candle right on that, where the gap fill level is at. Also, if you threw your Fibonacci level, it's the last level of a Fibonacci retracement zone, which is a 61.8% retracement. What it means is from up top here, we came down to 61.8% from this move. If this is 100%, this is 61.8% retracement, which is the last level of Fibonacci retracement zone. But what we have is that towards the last hour, though, we saw some buying activity there with this. This bullish means a buying volume there, pretty high volume if you just look at it here in a historical perspective. You're just looking at a couple of weeks or so. But again, any of these candlestick analysis, we have to see a follow through. I cannot assume that it's going to continue higher. So if we start to see some follow through, possibly in a couple hours, so we may get back up to some of these level here. But the problem is when we get back up here, though, if we do get back up, that level might be served as what? Old support becoming a new resistance. Just looking at 65-minute chart, some of the oscillators here. Again, we're looking at 65-minute chart. Looking at trying to ascertain minor term sentiment here. We're getting back down to potentially oversold status. Again, looking at minor term sentiment here, right? We are getting, so this means that, doesn't mean that this is a level that we're gonna have a complete reversal. But if we're gonna see any kind of short-term reversal, if we see maybe a couple of hours of bullish run tomorrow, this is a good level to do it. That's kind of what he's saying here. But just because we're at the oversold status, oversold level, does not mean that it is going to bounce. I hope you guys understand that we can distinct between the two. If it's gonna bounce, if we start to see certain tangible data that is going up, this is a good level to do it. But it can stay, just keep in mind, it can stay oversold longer than most people expect. So looking at the 65-minute chart here, we're looking at the last level of support. If we lose this level, there's a good chance that it might come back down to about 202 level. There might be a kind of a level of, you know, looking at a minor term, there could be some kind of a bounce here. And then if we don't break above this level, so if we don't do something like this, what's going to happen is going to come lower, and we're going to create a lower high, and then we may continue lower back down to about 202 level here if we lose this level again. Another scenario might be we come down and then get back up, we might do some kind of double bottom, but we wouldn't know that until we see the price action happening, right? Actually, let's look at daily chart and see what it looks like in the daily chart. Looking at the daily chart here, let me just clear these up. And I'll just finish this video very, very quickly for you guys today. Looking at a daily chart here, obviously we're still, just keep that in mind, we're still in an intermediate term uptrend. People always like to freak out. Remember when this happened here? I talked about that we're still in a primary term uptrend. I talked about that, and we talked about certain pivot levels here. We bounced off of it. We threw that double bottom here. We continued on. And in this scenario, we have 2 days of pretty, you know, heavy sell-off, right? With the pretty significant volume there, selling volume there, but keep in mind, benefit of the doubt still goes to buyers looking at it in an intermediate term perspective, right? We got the low, we got the higher low, we got the high, we got the higher high, and I'm sure there are a lot of people calling this a double top reversal. It's a formation, and it is true, it hasn't been confirmed. And you might ask me, well, when is it going to confirm, Kay? Well, what we need to see is we need to see this neckline. That's what we call neckline, a 201, 202-ish level in a spider. Neckline gets broken, retested it, and then if we fail from then we can call that a double top reversal. Until then, these double top can, you know, possibly get nullified by potentially continuing higher from this point on, because we're right at that 50 MA. You can see it on the daily chart. You know, 50 MA did act as resistance back in September 17th here, and then it flipped back, became support back in October 14th, and again back in November 13th, it was this vicinity that actually, again, that 50 MA vicinity, which is November 13th. So it's a strong pivot. We're hanging out at that level, so I'm not sure if you're gonna get up here. We talked about 65-minute chart, you know, seeing some kind of a bullish hammer. That's probably what we said. There's a little bit of lower wick here in this daily chart. That's what we're seeing. That 50 MA, possibly we're seeing some kind of dip buyers coming in, but these guys are very, very short term. People who bought at this level, very, very short term. They're watching this very, very closely tomorrow morning. If anything doesn't go right, these guys are gonna just exit. So, but these guys will probably hold on for a little bit if we start to see a little bit of bounce there. Another support level to watch is at this level right here. You can see that this is important pivot, right? This is what I call kind of a rising horizontal pivot, right? You can see that this was resistance, became a resistance, but flipped back, became support and a support. This is a level that you want to watch, is at this vicinity right here. And that's also that 100 SMA just coming down, that thick blue moving average coming down here. That is a daily 100 SMA, 100-day moving average there, right? So that's active strong support just right on the dot here. So that, again, that's the important level he's going to watch it. So I think the, you know, must hold level for this intermediate term trend to continue, I want to give kind of a band of support, is this level. So you want to watch this and you're bullish in the market, right? And you want to see how far it can go. You want to make sure the spider hold above 200. This is what I call a must hold level. If we can hold above this level, I believe the trend will continue, and it will continue to the upside, and the intermediate uptrend will continue on to the upside. And if you really want to short this market, I really wouldn't want to short this market until the price gets probably below 200 or lower, because there could be a lot of shenanigan happening. I mean, you could look at this very, very closely, and once they start to get slight below, you're gonna short here. You know that kind of stuff don't always work out very, very well. What's gonna happen? There's gonna be a lot of traps and whatnot. There's a lot of volatility that could happen. What's the best way to do is you want to make sure once it gets confirmed of that double top, potentially double top, you want to see a retest and then a fail. that will be the good confirmation there. But obviously sometimes they don't always get that retest. What it does is it just goes straight down. But again, you know, you guys hear me say this a lot. Let's work with tangible data at hand. Let's not work with data that is not there. The data that is not there is the data that I just drew. That's not the data there. But we might get the data tomorrow, early next week. So let's not be too ahead of ourselves. But as far as a minor term sentiment is concerned, it is bearish. We lost 10 and 20 MA. If you want minor term sentiment to go back to bullish, we want these 10 and 20 MA to be reclaimed to the upside. Currently, we are sitting right on the 50 MA, so that's the level to watch. And the next level of support is this level right here at around, you know, about 203.50, 203.30. Currently, we're at support at 205.61, and next level support is at 203.11, and after there will be 202.33. So here's a couple level here. 203.50, 202.20, and then after there will be about 200. So those three levels of support to watch next, tomorrow and next week. If we find a strong bounce on any of those levels, I would have to assume that the trend is going to continue on in the intermediate to primary term. And for the minor term sentiment to change to bullish side, you want to see 10 and 20 MA getting reclaimed back up to the upside, like something like this. Once we see that, then potentially we can nullify this double bottom or double top there, and then we can go from there. Have a great night. I'll talk to you guys in the next market commentary.